Welcome back to my daily report market videos with me, Richard Perry, market analyst at Hantec on Tuesday, 4th of June. Let's have a look at dollar yen. And now the theme of today's videos and the morning report is the fact that we've seen that maybe the start of a bit of a change of sentiment. We've seen that the dollar has been under pressure. We've seen that the yen safe haven play has still been pulling higher, but is that about to turn around? Now, interesting that as the European session has really kicked into gear, we've seen that the dollar yen has started to pick up a bit. Say for example, if the market closed here at 108.15 area, that is a small bull hammer candle. Now, at the moment, we're still in this corrective phase. We've got all these momentum indicators which are still correctively configured. Stochastics falling, MACD lines falling, RSI stuck under 30. But a prospect of a bull hammer would be positive on a near-term basis. And you can see here, sorry, that's not dollar yen. You can see here the possibility of this now turning into a bull divergence on the hourly RSI. We could also see that coming through on the MACD lines as well. So if we started to see that the market recovers through 108.50, which was the old key low, 108.50, old support becomes new resistance, and basically capped the gains yesterday, 108.45. If you see that high of 108.45 taken out, then that is really turning into a more of a recovery phase. But at the moment, we're still very early doors in this recovery phase, if there is one at all. You could argue a little bit of resistance at 108.20, but the fact is that we've just ticked higher. I mean, it's trading at the day high at the moment, but as I said, this is very early stages of this potential recovery, and we need to see a lot more. Ideally, you'd want to see the RSI back above 30 on the daily chart, for example. And 108.50 is a fairly important resistance, and then you're looking at 109 figure. Even then, another resistance of overhead supply. So it would still simply be a return towards this downtrend, and the resistance of the moving average, which is 21-day moving average, falling at 109.50. So there's still a lot to do for a recovery to get going. But if it does start to get going and the legs are in it, then there is fairly decent amount to unwind as well. So this could be an interesting turning point to keep an eye on, and certainly that hourly chart moving, as I said, above 108.45, 108.50. MACD lines above neutral with a positive divergence would be, again, a pretty decent and encouraging development here for the dollar yen. But for now, still very early stages. So I wish you good luck in your trading, and I'll speak to you later.